Without further ado, I want to introduce our host and our teacher today. This is Laura Bailey of the accounting agency.
Hi. Well, please bear with me first of all, because this is the first time I'm using the app to go through my slides. Has everyone filled out their pink slip? Okay, great, because we will have a couple of little games depending on time, and then at the end we'll do a raffle for a giveaway. A little bit about me. I am married. My husband was born in, well, he was born in Beaumont, but raised in Kingwood. I have 4 children. Forgot about the baby just then. 4 children. And, you know, when it came time and I wanted to set off and do something on my own after being in accounting for 15 plus years, I decided, you know, the only thing I'm good at is really accounting. So that's what I chose to do. I was born in England. My mother is Middle Eastern. My dad is from the UK. And then I grew up in Saudi Arabia for 14 years and finished high school in Egypt until I decided to come to the US as an international student. I have my bachelor's in accounting and supply chain management. And I finished my MBA. I just recently finished my...
I found Alicia.
my master's of accountancy last week, and completed my CPA, my last CPA exam a couple of months ago, maybe a month ago now.
Congratulations.
So it has been a really busy beginning of the year for me. You know, my background with work, I've always been in accounting, also in manufacturing and supply chain. That's where I chose to go initially because it's more fun, I thought. But then I needed hours under a CPA, so I ended up transitioning to an accounting position in the manufacturing area, and then I moved on from services, a distillery, and that was it. I went off on my own. I started my business in 2021 when I had lost my mother, and she was always an entrepreneur. She had her own businesses in Alexandria, Egypt, and then one in Abu Dhabi. And it was just something I was thinking of that, you know, what can I do? I was doing consulting at the time, so I figured, okay, why not make it official and form an entity like an LLC. Why we're here today? Well, tax season is over, and usually with a lot of my clients in tax time, I find that come March, they're always frustrated and they tell themselves, I wish I would have been more organized for this. You know, if you stay organized, either you're having to get someone to clean up your business books for you, or you're scrambling to figure out how to do it yourself so you can give your CPA or tax preparer the information. And you know, if you're hiring someone else to do that cleanup, it's always more expensive than if you had been proactive and managing it on a month-to-month basis. So you know, by being proactive, May is, you know, a perfect time right now. We're 4 months into the year. You know, you have time to think about, okay, what happened in the first 4 months? Now what can I do? And I've got 8 months to do it. Once you get to December, you're so limited in January with what you can do to help you tax-wise and minimize your tax burden, unless you're contributing to your 401k or, you know, something like that, or your those things that go on until April. So at that point, you're just being reactive. So it's all about door 2, being proactive. Today's roadmap, we're going to discuss what you can actually write off, how your business structure changes everything, industry-specific deductions, home office deductions, the mileage deduction, and a few other things such as depreciation. Also, quarterly tax payments without a panic or without avoiding them, from what I've seen. And then also a few new things for 2026. So even if you still have a W-2 job, this will be applicable to you because it does include some of the changes in tax laws that, you know, will help you come tax time. Part 1, the foundations. there are three words that people use. A write-off. A write-off is not an actual tax term. Typically when business owners use write-off, they mean a deduction, right? If you buy a computer that is only for your business and they call it a write-off, no, it is a deduction. A deduction is something that will reduce your income. By reduce your income, it means if you buy a $10,000 asset, right, it will reduce your income just by, depending on your tax bracket. So if you're in a 23% tax bracket, it's only reducing your overall income by $2,300, right? A credit, however, reduces your overall tax bill, which, a $2,000 credit equals a $2,000 lower tax liability. So every single time, a credit is always worth way more than your deduction. Before we jump into the different deductions for your industry and based on your structure, I thought we could do a little game to see who knows if something is a deduction or something is not a deduction. So please, I'm going to put up a question. I'm going to put up a question, and then the first one to raise their hand can answer that question. Sound good?
Yeah.
All right. You buy a new laptop that you use 100% for your business.
Deductions.
That's right. It is a deduction. It's 100% for your business. How you treat it is up to you. It could be either expensed. If it's over $2,500, you may want to depreciate it. And then either depreciate it or you can take a section 179, which we'll get into later. You take a client to dinner and discuss work, and the meal costs $80. Go on, Ellen. Huh?
No, deduction?
So it is partially a deduction. With taking out clients, it is a 50% deduction, right? There are instances where you could deduct a lunch or an event at 100% if it's for your employees. If you're taking all your employees out for lunch, it's 100% deductible. Clients, only 50%. And you have to be present or an employee from your business in order
That's
for
what
that to
Amanda
be.
was teaching me.
Huh?
That's what Amanda was teaching
Yeah.
me.
You buy a Peloton for your home office because exercise helps you focus.
I'm gonna say no.
No, it is not a deduction. However, if you are a fitness influencer, it could be a deduction. Right? So no, it's not.
How many videos do you have to put up?
To be an influencer. You pay your 12-year-old kid $10,000 to do your social media.
Yes.
So yes, if you're paying them a reasonable amount for the year, right, it could be a deduction. And with that though, it's one of those things that a lot of people don't take advantage of. They do have to do the work. You do want to make sure you're accurately documenting everything just for your own backup. And that way, if you pay your child a dollar amount throughout the year that is under the standard deduction, which I believe for 2026 is around $15,000, then they don't have to pay any tax on that. You get the savings from it, and your family saves overall.
But it's only child in the household.
Yes.
I have a question.
It's a child under the age of 18.
What happened, because like my son, he's 17, sometimes he works for us and I pay him, like I just transfer the money to his account. What happens when he hits 18? Because he'll be 18 in August. It doesn't count anymore.
No, it won't, but also it depends on the total dollar amount by the end of the year, right? And then also, are you issuing him a 1099 or anything like that for what you're transferring?
No.
So then no, it's, you want to make sure you're keeping track of the total amount that you're paying them,
Okay.
and then filing it that way. And then depending on what that ending number is, you know, he may have to how are you paying him? You're just transferring it? He's
I
not
just
like he's on
transfer it from my
payroll.
business account to his account, and I split it. I make him, like, if I pay him $100, I put 50 in his savings, 50 in his checking.
Oh, that's awesome. That's
what
really
That was
good.
my question too.
Yeah.
I like that.
But then when you're, you know, once he's over
Should I do a
18.
W-9 for him? He doesn't work a lot for us because he's in school, you know?
Mhm. Well, also with the 1099s for 2026, they're increasing the threshold. So previously, you know, it was $600 or more. You issue them a 1099. In 2026, it's gone up from that. I want to say it's over $1,000, maybe under $2,500. But I can confirm. My numbers have just gone blank on me, but it has increased. So if it's under that dollar amount, then he doesn't even need a 1099, and you can still use the expense.
Okay.
What if
Can
you
I
pay,
ask a
what if you
question
pay him
on that?
$10 a year?
$10 a year, yeah. But you don't need to issue a 1099. But that's fine.
So basically, you're allowed to up to 12,000 before you issue the 1099.
For anyone, for example, if one of your grandkids, right? If it's a reasonable, you know, you can't have a 2-year-old doing your social media,
Correct.
Well, you
right?
could do your grandkids too,
Mm-hmm.
not just your kids?
Well, your kids, because when you're filing your tax file, right? It would be your children.
Oh,
Whoever claims that child.
all right,
Okay,
gotcha.
I'll figure that out too.
Yeah.
Yeah.
But thank you.
I
Yeah.
have a question on the, when you don't give someone a 1099 subcontractor, what do we do as business owners with that money that we've actually given out that we don't?
So, well, I mean, even if you don't give them a 1099, I mean, you can file your 1099s late, right? Because technically, if it's a contractor, you have them fill out the W-9.
If they make under $600 and I don't give them
Oh, then you can still expense it to
You
whatever
still-
the
it's a
category is.
a
Yeah.
deduction? Oh, okay.
Wait, did I read it?
I say yes to this one.
You drive from home to your office every day the same route. No, because it's regular commuting. It's just a commute. It doesn't matter. You're just commuting. So it
But
is
if
not
I'm
a
on the job
deduction.
and I have to eat,
You're on the job. What do you mean though?
like if I'm across town photographing something and I'm starving, it's lunch hour, can I get something from McDonald's or wherever? I never eat at McDonald's,
But if you're on the job and you've left your home to go to a location,
Yes.
right, for a client photo shoot,
Yes.
that is deductible. This is just if you had an office space like me going from home to my office because it's not in my home,
Oh.
then that's me commuting to my workplace.
Okay, makes sense.
So like in my
No.
line of work, I don't have like an office per se, but I'm
Mhm.
going to client-based locations.
Yes, then that will be
So
included.
Oh,
We can do it together.
I know.
And you want to make sure that you're tracking everything. You know, if depending on how you're handling your accounting, if you have QuickBooks, for example, you can download the QuickBooks app, and once in the app, you can turn on Track My Mileage, and from there, you can have it to turn on automatically. And even if you don't go in and say this was a business related, this was personal, it still stores everything, and you can go back and you can then also do it from your desktop. So, you know, because I know for some of my clients, they won't keep track of everything, and then I download it in Excel, and I'm still able to see all of their trips to send to them for them to go through everything. But at least something is tracking
so
your
it will
trips.
track it, and then you go in and pick
Yeah.
what
She's
was
talking
what
about
was the
me. I
tax.
don't track anything. She made me turn it on.
No, but you'd be amazed. I mean, there's so many people who don't. turn
I
it on.
don't.
But it helps so much at the end when I meet with Laura.
And so that would be good for us for our landscaping, like Leo, you know, when he does his maintenance routes.
Yes.
Mhm.
Okay.
And we'll touch base on the mileage is something that everyone, if you're
And I
going
drive
to,
around to nurseries and
Yeah.
like landscaping places to
yeah,
get
so that would
materials.
be, you know, a trip to go pick up supplies or to pick up, whatever it is. It doesn't necessarily have to be going directly to your client. If you're picking up something that you're needing for work, then it will be included.
Like for
Like
instance,
when I
for
went-
myself, I do a lot of driving, shopping for my clients,
Mhm.
going to consultations, going to their homes.
Yeah,
My home is my office.
Yeah, my
Okay.
home is my office
Um,
too.
And it's $2,000, I just looked it up.
oh good,
$2,000 for the
Yeah.
1099s.
wonderful.
Oh, I know this
It is not, unless it has your marketing on it, correct?
Oh.
Yeah.
No.
No, that's.
I mean, it is not fully deductible.
Yeah.
Okay, entity structures. Everyone has been given a workbook, and I created this customized calendar that has all of your tax deadlines for Texas and for the federal and payroll taxes. And then also the workbook follows, the outline of the presentation. And within the workbook as well, it has more information in there too, so you can follow along. It has some good pages on the industry-specific deductions that I wasn't able to fit into all my slides. All right, entity structures. Which one are you? These are the 5 main business structures. There are more, right, that aren't listed here, such as nonprofits, PLLCs, trusts, but these are the main ones. Most of you will probably be in the first 3 or possibly the S Corp, or you may be considering an S Corp status, right? As a sole proprietor, it's you and your business. You're just one. A partnership, obviously, is you and somebody else. An LLC is a legal paper. It's more for liability purposes. And then an S Corp is a tax election where you can save taxes. And a C Corp is a completely separate entity. When should you consider an S Corp? There is no, you can't just say, when you hit this number, become an S Corp. I mean, there is a range. If you're netting between 80 and 100,000 a year, it's something you should definitely look at and have the numbers done, because, by being an S Corp, you see all of these things on social media about tax savings, being S Corp, but you want to make sure that you're also being compliant. And by being compliant, that means that you have to pay yourself a reasonable compensation. And and with that, someone would be a professional would be able to put together a reasonable compensation analysis for you and tell you, okay, right now, given the net income of your business and paying yourself, this reasonable amount based on where, you live, the industry that you're in, there would be tax savings, or maybe there'll be tax losses, because, once you switch to S Corp, you're gonna be paying payroll taxes on your reasonable compensation. You're also gonna be, your tax filing is typically more expensive, right? Because you're having to file a separate tax file, and then you receive a K-1 for your personal tax return. So it all just depends. Sometimes it may be beneficial, other times it may, be worth just waiting, right? Also, as an S Corp, the main reason why you save on taxes is because as a sole proprietor or an LLC, you're paying self-employment tax, right? When you switch to an S Corp, you're no longer paying self-employment tax. So when you receive a K-1 for your net income after your distributions, you're paying just your federal taxes on that dollar amount. So you're not including the 15.3% self-employment tax on top of that, if that makes sense. Your industry. Is anyone here in wellness, a creative?
That's wellness.
Wellness.
Beauty and wellness, but
Beauty and wellness,
lucky
yeah.
and creative, but
Online or service-based? Well, I guess also beauty and creative could be that. Real estate?
You just need.
And does anyone have a brick and mortar? Austin. Here are the top deductions for your industry. Like I said, there's a lot of different deductions that you could get into, and they're in your workbook that I provided with more detail. And a lot of times, some of these different industries, they don't think of everything. I mean, a lot of times people miss the mileage deduction. Sometimes people miss their home office deduction, or they're just doing their home office deduction in one way, the simplified way. Or, they make large purchases and forget to depreciate it, or to take the bonus depreciation or the section 179, which can be beneficial. And a lot of times you want to make sure that you're thinking of next year and beyond before you choose whether or not you're going to depreciate, or if you're going to take the bonus depreciation or the section 179 to deduct that. Where the easy wins lie. Your home office deduction. There's two ways to do it. The simplified method is taking your office, the square footage of your office, and taking up to a max of 300 square feet, and it's $5 per square foot. The actual method is taking the business percentage of the overall cost. So when you're filing, you have your direct costs. For example, you painted your office, you bought furniture for your office space, right? Those are direct costs for your office. And then you have indirect costs that you could apply to it, which, could be your pest control, your rent if you're renting your home, cleaning, anything like that. A portion of your mortgage interest, all of that taken for the percentage of space in your home that is your office. Those will be applied as indirect costs. Usually, the actual method is gonna save you more, whereas instead of just taking the $5 per square foot. But from what, in my experience with a lot of people that I work with, they're not keeping track of what all of their expenses were. Their electricity, their gas, their water, to outline everything. So then they end up either having to scramble to find all of those things, or they choose just to go for the $5 per square foot.
So I pay my pest control and my utilities with my business account. So, and like my bookkeeper, she just, I don't know, whatever she does. So I'm doing the right thing by paying, and my cleaning lady too, I pay her also from my business account. Sometimes some of the utilities I'll split between my personal account and my, depending on how high it is, I'll split it. So it's okay that I do that.
Well, I mean, so if you work out of your home, when with your tax filing though, depending on how your bookkeeper should be classifying it by the percentage that would be applicable for just your home office.
Okay. And every year I do renter's insurance. I haven't given her that. Is that something I could include?
When she's calculating, depending on how she does your home office deduction, right? That is something that you can include in there, but it would be an indirect cost. So only the percentage, if your office is taking up 5-10% of your home, right? Then 5-10% of that total cost will be towards your home office deduction.
Got it. Thank you.
The mileage rate. The mileage rate for 2026 is 72.5 cents per mile, which is awesome because I don't know how many years it's been now, but the mileage rate is only going up and up and up. It's the highest it has been, and it is definitely beneficial, especially for people who are driving to their clients, driving to pick up all these supplies, and always, if running your business requires you to go out to do your business, you definitely need to track your miles because it will save you a good amount. I mean, 72.5 cents doesn't sound like a lot, but when you add up all the miles that you're driving, especially in Houston, right, where you're driving all over the place, I mean, always. So it's definitely something that you should look into. Depreciation. Depreciation is a lot of times something that, a lot of small business owners aren't thinking of when they're making large purchases, $2,500 or higher, it's worth considering the different ways to deduct. The traditional depreciation is where if you bought something, for a certain amount of money and it's, it has a useful life of 5 years and whoever does your accounting should be able to, go through, depending on the asset type, has different life, right? And then you would be able to split up that depreciation expense each year. So it's predictable, you know that you have that next year. Usually when you're getting your taxes prepared, they should be able to also give you the depreciation schedule. So for next year what you're gonna have. Also, there's the section 179 where you can deduct the full cost of the item in that year. So this one is limited by your income. So if you don't have enough income, what you're netting after all the other deductions, it's only limited to that dollar amount. However, if you have a good net income, right, you can deduct the full cost in 2026. That the section 179 is limited to 2.5 million, which is pretty good. It's gone up. And you select it on a per asset basis, per item that you purchased. Bonus depreciation. Bonus depreciation is different from section 179 because you can take the full amount. Doesn't matter if you're at a loss or not, but you can only take it in year one. So the year you purchased the asset, right? And it can be carried forward. So if you're at a loss, but you take the full amount of the bonus depreciation and it creates an even bigger loss, right? That loss can be carried forward, and then when you file your next return for the next year, if your income is higher than it was, that carry forward loss will then help you in the future period. Does that make sense?
Yes.
Find the missing money. I added this. I wasn't sure if we were gonna have time, but April, would you hand out this little game? I was laughing to myself when I put this together and we need to help her.
You are not.
Okay, so meet Sloan. Her feed is perfect, her books are not. She's a lifestyle photographer in Kingwood. She's been 3 years in business. This year, she had $85,000 in revenue. She's an LLC, taxed as a sole proprietor, which means she's not a corporation. She files it with her personal return. She pays self-employment taxes. She uses her car for 70% of her client shoots, works from a converted bedroom at home. Bought a new camera in November for $4,200, paid her sister to manage Instagram, and she has never made an estimated tax payment. So on your worksheet, I just figured that if you could go through each of the questions on there and think about what are the opportunities that she can take advantage of. Yes, she runs all her, that's right, business and personal
mistake.
income through one bank account.
No, separate.
Yeah, that's what I put as, what would be your bonus, the bonus one? First, separate your accounts.
Yeah.
Before you get anything else.
Especially since she is an LLC, right? With mixing business and personal as an LLC, you filed you have your certificate of formation with the state, right? The whole liability for that is gone. It's called piercing the
Corporate mayor.
the corporate veil. I went blank, thank you. But yeah, so she definitely wants to separate all of her expenses. And that way it's also easier to track, right? It's harder to go through things when it's all commingled. And then if you hire a bookkeeper or an accountant or anyone, they're gonna be frustrated with you if you don't separate all of your expenses.
I can't even imagine. So when you're just starting out though, there's not enough money in the business bank account, right? So how is that reconciled at the end of the year, once there is enough money where you can start paying things on a regular basis out of the business?
So, you know, what you can do is you open your business bank account, right? If you're paying it, if you're using personal funds to pay your expenses because you're just getting started or whatever the situation is, just transfer it to your business account
Okay.
and then pay those business expenses.
Okay, so transferring from personal to business,
business.
it's
It's
easier
okay.
to reconcile that.
Yeah.
You're almost taking a loan against yourself.
I'll say, how do you
right?
account for it?
Yeah.
Owner's
Yeah, so it's an
Owner's
owner contribution, but also depending on your tax situation, if you're an LLC,
Mhm.
right? You're filing it as a sole proprietor, you're filing with your personal return.
Yeah.
So when you're filing a Schedule C for your business, you're not putting in there your owner contributions or owner distributions. This is your total income, here are all of your expenses or additional deductions, home office, everything else, and this is your ending number. It's not, well, I took $50 out of the business, because it's all on your personal return. When you're an S corp, it's different because you're filing a separate tax return for your business, because it's a separate entity, and then you're getting a K-1 from it. So it all just depends, really, but it's always, you're fine if you open up 2 separate bank accounts, obviously, and you transfer in or out to your personal.
Oh, really?
I do that all the time.
So out to personal would be more like your
A
salary
contribution.
Contribution.
from the business to the personal?
Yes.
So what
It's a-
contribution?
It's a contribution.
So you can contribute back and forth to yourself?
An owner draw,
Yeah.
Oh, got it.
an owner draw,
So you're
And-
putting back in or you're drawing out?
yes.
Okay.
If you're an S corp, one other thing is if you're paying yourself a reasonable compensation, that means you're on payroll,
Mhm.
right? And you're getting a W-2 at the end of the year in addition to your K-1. If you're paying yourself a reasonable compensation, you can still take owner draws.
Mhm.
That's the one nuance, is that if you're able, let's say there was an audit on you and you're an S corp and you can show I'm paying myself a reasonable compensation, you can take draws out of your business. Times, depending on your business, right, and depending on how much expenses you have. Sometimes if you're a service-based business, you don't have that many expenses, right? So you're gonna want to set aside more on the higher end for your estimated taxes if you're a sole proprietor LLC. And luckily in Texas, we don't have state tax, so you're putting into, you're taking into consideration your federal taxes only here, where you have your income tax, depending on what percentage you're in, plus your self-employment tax, which is 15.3%. And one thing that I urge a lot of my clients to do is to open up a separate account, a savings type account, so that they're able to say, okay, I made $1,000, I'm gonna take 30% or 20%, depending on how many expenses and deductions you have, and I'm gonna put it and set it aside to then pay their quarterly taxes.
So that's something I'm actually gonna work on when I get home. So that's why I was asking, because I was gonna go over my quarterly report that the bookkeeper did and then get a percentage of that and pay.
Mhm.
So I would do 25 to 30% of what I made the first quarter.
So, depending on your business though, because there's a whole calculation that you can go through for calculating your quarterly taxes. To be safe, yes, you can put in you can pay 25 to 30%. If you overpay your estimated taxes, when you file your tax return, you'll get that money back.
Okay.
But you're not an S corp, correct?
Well, when my person filed our paperwork, like to become an LLC, she said she did it like an S corp, but we're not. We didn't file our taxes like an S corp this time. We got money back this time. But we're trying to this year, like I said, this year our goal for the business is to familiarize ourselves with just money personally and business,
Mhm.
accounting and bookkeeping and all of that, because we're not good at it. We wanna know where our money's going, and then just in case we owe, that's why we wanna try to get in
Yeah.
the habit of paying quarterly.
Is Amanda doing your bookkeeping?
No, Stacy, Chavez does, but Amanda, we got with her so she could help us budget and go everything,
Yeah.
so she gets the reports. I get the reports from Stacy, and then I'm passing them to Amanda, then me and Amanda have a meeting. And then
Okay,
Amanda keeps saying she works with you a lot.
Yes.
So she said eventually in the future you should work with Laura once we get
well,
everything situated.
I do have a spreadsheet that I've shared with her, because I work with her a lot, and she's also a client of mine, that is a template for helping calculate your estimated taxes that I can give to her to share with you.
Okay.
Or she already has it, but I'll let her know she can share it.
Okay. Thank you.
Your estimated tax due dates, the first quarter is due, April 15th. And then June 15th, September 15th, and then January 15th, 2027. If you didn't make depending on how you're going or how your business is looking so far, right? If you start in the June estimated tax payment, that may be okay. Because it all depends on your ending number, right? And one way to maybe look at it is, how did your business do last year? How are you projecting this year so far after the first quarter, right? And then also there is a safe harbor rule. So depending on what your AGI is, if your AGI is over 150,000, then you want to make sure that you have paid into estimated taxes, or you've withheld, if someone has a W-2 job, right, 110% of the tax from last year, and then you're covered under the safe harbor.
What's the advantage or disadvantage between paying quarterly or annually?
Well, if you know you always owe, right, even if you pay at the end of the year, you'll still get a penalty for not making those quarterly payments. It's not as big, but you'll still get a penalty.
So they want you to do quarterly?
Yes, unless you can show, because there is a form that can be filed. There is a way to show that, okay, the first quarter of the year I didn't do so great, right? And you put in your annualized income by quarter, and then they'll see, okay, you did way better in the second quarter, right? And that's when you did make an estimated tax payment, and then they reduce that penalty.
So why does everything like full systems go for April? It's like, I mean, I guess, that's what I think of CPAs. Everybody's like heads down for April. So in fact, that's not the case.
What do you mean?
Well, I mean, are you working with people quarterly then?
Yes.
Oh, okay.
Yeah, so I mean, before April 15th, it is very hard, I think, to get with someone just because of the tax deadline for the prior year, right? But also, if you're keeping, which is why bookkeeping and your tax person, I mean, it all goes hand in hand. You want to make sure you have accurate numbers, you have the numbers there, so then it makes it easier for calculating these quarterly payments, right? And then also, unless you filed an extension, you kind of know what your tax burden is maybe going to be, or what you need to meet for the safe harbor to then avoid any penalties.
Got it.
What is new for 2026? It was, it was also implemented in 2025, but they passed the OBBB, right? The big beautiful bill, where there is a deductible for tipped workers up to $25,000. Also overtime up to $25,000 if you're filing joint, $12,500 if you're not filing joint. And then also, in addition to that, if you purchase a new vehicle in 2025 or beyond, not leased it, if you purchase the vehicle and you're financing that vehicle, you're financing, the bank that is doing the financing should issue you a 1098 similar to your mortgage interest, right? and you get a deduction on the interest paid on that loan for the vehicle. And that's only for vehicles purchased from 2025 forward.
New cars only?
If it's new to you, yeah.
It's new to us.
Like, we bought a truck from Tamara, the end of December going in January, and we paid like 4,300, so all that is deducted.
No, it's only if it's financed, it's the interest on a loan.
Oh, okay.
I mean, that would be great though if it was, right?
Yeah. And it has to be purchased through the business versus personal.
No, this is
Okay.
applicable to everybody.
Okay.
Yes.
Oh, that's not just business.
No, it's applicable to everybody. So even for 2025, there was there was, in your tax return, there's a separate schedule. You know, usually you can, if you're itemizing, you have your schedule for itemizing. This is a Schedule 1A, which you can put in there if your spouse had overtime, or if you had overtime, if you're W-2, if you receive tips and you're a tipped worker, and it has on there your vehicle. When you're trying to get that deduction for the vehicle interest, you do have, and the 1098 should include all this information, but it should show what the loan originated at, what that dollar amount is, the VIN number of your vehicle, and then the amount of interest paid for the year.
I have a question about the overtime thing. I think I understand it, but the 25, so my husband's W-2,
Mhm.
if his overtime is more than $25,000 worth of income, then he's only deducting 25,000,
Yes.
right? Okay.
And also one important thing is that when it's the overtime pay,
Yeah.
right? It is, for example, if they're paid double time and overtime,
I think
you
time and a
deduct, yes, so if it's time and a half, you deduct the regular hourly rate,
Right,
right? And then it's just
Yes.
that half.
it's
That's-
just the half, right?
yes.
That's what I thought.
Yes.
Okay.
And I do know
I'm so
that.
glad we have it now, that's great.
Mhm. I do know that for 2026, some companies did it in 2025, but not that many. The W-2s that are being issued, they should have in, box 14,
Uh-huh.
it should include that overtime dollar amount, so that you know. Otherwise, I know in 2025, a lot of times we had to go back to the last pay stub. Yeah.
Okay, that's cool. I'm excited they did that.
So what is a few things that I always see going wrong? One, obviously, mixing personal and business expenses. That's always difficult for you, right, April? April, it works at the accounting agency and does all the bookkeeping. Two, no system for setting aside any money for taxes. Right? Not having it designated, it's harder to hold on to money if you don't separate it. Right, it's easy to just lose it or spend it. And then waiting until tax season to look at the books. I mean, that should be number one, honestly, for me, because there is so many times where I have new clients and they come in like, okay, well, what do you need to do my taxes? Can I give you my bank statements? And it's, it's extremely time consuming. And if I go back to them to tell them, okay, well, can you go through all of this? To reconcile all of your things, because maybe they're not using an accounting system. Maybe it's just all in their bank account. Otherwise, they're paying more for their tax preparation because it's having to be cleaned up, right? And then there's also more back and forth on what is this, what is that, what is this. So, you save money by keeping track of all of your expenses and your income, everything. Not just on taxes, but on the services when you want to do your taxes.
So what would be the best system, like, just starting out, don't need a whole lot of stuff yet, what is the best system for tracking?
So, there is an app, it's Wave Apps, I believe there is a free subscription to it, where you're not sending bills out or anything from there, but it is free just to track what's coming in and out. QuickBooks Simple Start is fairly cheap. Right, and it does, even with Simple Start, you could use the invoicing if you're invoicing clients, but you can also just use it for connecting your bank account, tracking your expenses and what your income is. And then there's a few other ones, FreshBooks, Xero. But honestly, unless I have some clients that started with Wave apps and it wasn't terrible on the free subscription. And then again, QuickBooks is fairly, inexpensive, or you can get with an accountant and they'll give you their discount for your QuickBooks.
Okay, good. I have a question kind of in that same vein.
Mm-hmm.
So, as someone who is setting up a new business, and I'm kind of in that same category, you have what 3 things you see going wrong? What are the 3 things that you would suggest as a new business owner setting up are the most important things to get in place when you are first starting with the intention of eventually growing into needing a bookkeeper and all that kind of stuff?
Well, once you first get started and you register with the Secretary of State, you have your certificate of formation, you register with the IRS to get your FEIN, right? Make sure you open up a business bank account first of all, and sometimes people are unsure which bank to use. Honestly, go to the same bank that your personal one is in if it's easiest, because it's easy to transfer to and from. And then get started with some sort of accounting system. It doesn't have to be QuickBooks or anything like that, but because you want to save every dollar, you could use Excel, you could anything like that, but make sure you are tracking all of your expenses. Make sure you know what you're putting into the business and what you're getting out of it as well, or what you're earning. And then also, I think one of the biggest things that I see so many people jumping in to start a business. It's so easy to register for an LLC.
Right.
I mean,
Right.
It's $300, but
Yeah.
it's so easy to jump in and do that.
Yeah.
But a lot of times, like I've met people who have like several LLCs, and they forget also we're in Texas, so you do have to file your franchise taxes, right? Which is due today, by the way. And so with your annual franchise tax, like a lot of people miss that. You don't owe anything unless you're making over a certain amount, but with that, a lot of people just jump in, start an LLC without planning everything out, and they don't have a business plan.
Right.
Taking the time to build a business plan is so beneficial. I think I messed with mine for, I can't even remember how long. And then now, honestly, I think it would be good for me to go back and revisit that, because things change, right, as you go on. But having, a brainstorm of what you want to do, how you want to do it, what your competition is, and where you plan to be in 5 years, or where you're hoping to be, will really help navigate you with, what to do, and to see if it even is something that you want to do, you know?
Yeah.
Or you have a way of tracking it.
I will
My personal
also,
advice is a business plan.
yeah, and I will also warn everyone, I have let my LLC lapse, and instead of opening a new company, I just reinstated the LLC. File your taxes, your franchise taxes every year, because reinstating, it's tricky,
It is.
and it's a lot of pain, and it's, so just
Yeah.
file your franchise taxes. That's my suggestion.
Yeah.
'Cause-
Yeah, it can be, because,
Yeah, I let it lapse for an entire year, and going back, it was a lot. So,
It is a lot,
please
because
don't do that.
you file and you register your LLC, or you do you get your certificate of formation from the Secretary of State, right? They then communicate with the comptroller, who then sends you your forms for your, for your franchise tax, and then also like sales tax, if that's applicable. And then if you let it lapse, the comptroller, sends you a notice, and then it still goes on. And the hassle is that you then have to go back to the Secretary, you have to send everything to the comptroller, you go back to the Secretary of State to prove it, and it's so much back and forth. And you don't, unless you're earning a certain amount of money, it's just an informational,
Public record.
yeah, it's your public information report that
Yeah.
you're filing, the PIR.
I ended up needing to hire a legal team to help me with the process. So, everybody, please file your
Yeah.
franchise tax today.
Yeah.
If you do one thing.
Yeah. All right. One last thing. So retirement. A lot of times people forget about the options on, how retirement can help you, significantly depending on, what you're trying to do. It will reduce your taxable income while building long-term wealth. And so it's two birds, one stone, right? A solo 401k has the highest contribution potential. A SEP IRA is the simplest setup. A simple IRA for small teams. As a business owner, you want to make sure if you do have employees or anything like that, to get with your financial advisor on, one of these that you can set up, and it will save money for your business as well.
What about an IUL?
I believe so, that too. But you want to make sure, depending on your setup and everything, do you have a financial advisor that you work with? I can send you a referral of a few. I have a few that I think are
Bilingual in
fantastic.
Spanish is great.
Huh? If they speak-
Bilingual in Spanish is great.
Okay, yeah. I do have one who's also bilingual.
Is Jennifer bilingual?
Yes, and she also has I believe she is, but she has a girl that works for her who is bilingual.
I love her.
Bookkeeping, this is more about me, or my business, our business. You get clearer visibility, stronger systems, and better opportunities for long-term growth. We offer, again, tax preparation, advisory, and monthly accounting. A lot of times though, depending on the accounting, I do also work with a lot of bookkeepers too, who, like Amanda, she is fantastic. She's a wealth of knowledge. She is so smart in everything that she does. I trust her completely. I will take any of her clients for taxes because I know that their books are going to be, on it. So, yep. These are the QR codes if you want to book a consultation, our website. And then on our website, there are more resources for download if you want any other little cheat sheets, and there's a bunch of stuff in there. It is also, these QR codes are also included in the back of the workbook that is provided. Ooh, now we get to do the drawing.
This looks crazy.